Hello, everyone. It's a real pleasure to welcome you in Senegal. I really hope you're enjoying your time here and really hope you'll get the most out of these ecosystem engagements. So, I am Mariam Job from Orange Ventures, and I'll be moderating this panel, the following panel, on the future of VC in West Africa. So join me in welcoming Mike Mompi from Enza Capital. Bongani. Yeah, you can sit down. Still fine. Hangui Mwambizi. Mohamed Kara from Launch Africa. Raphael Dana from Gozem. And Riki Yamayushi from Summit. Welcome, everyone. So, I don't know about you, but this is my first in-person panel since COVID, so let's have fun. Okay, so why don't we start with a quick introduction of yourselves? Maybe tell a bit about your story, fund strategy, investment strategy, the portfolio companies, the deals you've done in West Africa versus the rest of Africa, and probably when you started VCing on the continent, except for Raphael, because you can just introduce yourself and introduce Gozem, of course. Does it work for you? So, who want to start first? Yeah, of course.
So maybe like 2 minutes or something? I mean,
1 minute.
It's a lot to pack in there. But.
We'll just take your time.
Okay. Hi everyone, my name is Ricky from Double Feather Partners. Call ourselves DFP. We're a Japan-based, Africa-focused accelerator and also venture capital. So I think it's interesting today we saw a lot of like Japanese, I think we have AIC, we have Mitsubishi, so we're pretty excited to be here as well. But my background is in investment banking, so I worked in Morgan Stanley, then left, and then came to Africa, and then started investing here and also running the accelerator program with the Japanese government called JICA or JICA. So we are doing that in Kenya. Right now we have invested into 7 African startups in Africa. Unfortunately, West Africa, only 1 in Nigeria, so we definitely need to do better, but definitely see the energy and opportunities here. So really looking forward to getting to know everyone else here. And yeah, I'll pass it on.
Thank you.
Hi, so I'll go quickly. I'm Raphael Dana. I'm the co-founder of Gozem. Obviously, I'm not a VC, but I'll be more than happy to share our experience on raising money for the last 4 years in West Africa, and more specifically for Francophone Africa.
Hi everyone, my name is Mohamed. I am Sudanese. I'm a VC at Launch Africa. My background is engineering, but I had a brief stint at Goldman Sachs where I learned a little bit of finance. And then met Zachariah George and joined him in South Africa at the start of Launch Africa. We invest pre-Series A, so anything early stage, up to $300,000. We have quite a bit of investments in West Africa, including 6 here in Senegal, some of which will be pitching here today actually on the Series A track.
Hi everyone, my name is Hangui Mwambazi. I am a venture partner with Commerz Ventures, which is a German-based fintech specialist venture fund. Commerz Ventures recently closed their 3rd fund in March of this year at around 300 million euros. And part of that mandate, they decided they wanted to focus on fintech, insurtech investments across the continent, which is when I joined them really about a month ago. So they may be new to the African continent, but I'm South African, but I always say I belong to this entire continent. So I've been here for a while, doing a lot of VC, also started off in investment banking, did some private equity across the continent as well, and most recently involved in the sort of digital transformation of banks, Barclays Africa in particular. And very excited to be here in Senegal with all of you and looking forward to getting to know the rest of you.
Thank you. Bonjour ou rebonjour à tous. Mike Mompi from Enza Capital. I'm Ghanaian, so shout out to my Ghanaian homies here. Office is based in Nairobi, Kenya. Enza backs founders and teams using technology to solve large and meaningful problems across Africa. We only have one investment in Senegal. We will have more here, so looking to many of you in the audience to help us with that. Perhaps we can help you with your businesses. Across West Africa, however, we have about 8 portfolio companies in Nigeria, 2 in Ghana, and we also invest across the East African corridor, South Africa, and we've made an investment in Egypt. So we invest across logistics, financial services, healthcare, human capital management, and climate smart solutions. So anywhere there's a massive problem that requires a solution that can be driven and enabled by technology, that's where we focus. So a multi-stage investor. And I'll stop there. Thank you.
Oh, it works. Thank you so much. I don't know how you feel, but I feel like it's a very diverse panel. It's great. So my first question to all of you is all about the context, the fundraising context, because we have witnessed important changes in the last 10 years in the Africa investment landscape. So last year was a record year with 5 billion raised, and it is actually 12 times the amount raised in 2016. And even when I remember between 2000 and 2016, Africa just raised 3 billion in 16 years. And in 2016 only, actually, Africa raised $360 million. And it's half the amount they raised just in January this year. The figures speak for themselves, but I'm really keen to know what's your take on that. What do you think, in your opinion, is driving all this? Who wants to?
So I have the microphone, so I'll speak. That's the only reason. And then I'll pass it along. And more global context, in 2020, the Latin American venture market was about $4 or $5 billion. So just to put Africa's numbers in perspective, and the Southeast Asian market was about 8 billion in 2020. And so we've seen those markets take off, and what's encouraging is that we're seeing the markets here, and we're seeing kind of similar patterns. And then to kind of drill down and put that into the Francophone perspective, out of that 5 billion last year, about 500 something million, 580 million was maybe Francophone. So only 10% here. But there are a range of things that are, pushing the wind in our sails. We have technology penetration. I think, well, they're all the macro trends that everyone knows. I think one of the main things that is changing is people's perception of the continent and of what is possible in Africa and what can be built here by the people here, for the people here. And I think that that's probably the main thing. I won't go into all of the macro kind of drivers, and I'll save some answers for everyone else.
So one interesting thing, last year, towards the end of last year, I was at a conference in Egypt that was specifically targeting they were trying to bridge the gap between the Middle East, North Africa, and the rest of sort of sub-Saharan Africa, and it was a big innovation sort of fintech VC conference. And so in that, there was a lady that I spoke to in a VC fund that's based in Egypt, and I'll just use that as an example in terms of something that's driving some of these macro trends. But she said she started in VC in Egypt about 10 years ago. And before that, she constantly had to explain what venture capital even was. Technology, even as a concept, really wasn't a common thing. It wasn't in everyday language. It wasn't in sort of everyday consumer use cases, in a sense. So the one thing that she said completely turned that around is when Uber entered the market. And what Uber did for the Egyptian economy, according to her, is that it suddenly brought the ability to do things on your mobile phone. And that is the one thing that suddenly turned the economy around from a venture capital perspective, in that people started realizing, well, what else can I start doing on my mobile phone? So it's a lot to do with something around the entrenchment of technology, in a sense, from a mobile perspective. But being able to have such a powerful tool at everyone's disposal has also really accelerated. And I've seen that sort of same phenomenon play out in different markets. Once people realize the power of almost simple technology that they have in their hands, it's started creating a multiplier effect in terms of what other opportunities could that open up in the markets.
So it's very impressive growth metrics. 12 times as much as 2016 is quite impressive. But I think for the context of everyone in this room and maybe a little bit earlier stage, it's important to note that a lot of the funding that was received actually went to the very, very large rounds. So most of the funding didn't go to the early stage, it went to the mega deals or the mega rounds. So there's still lots and lots of space to grow and more funding, room for more funding in the early stage. So we still have a lot more work to do.
So from our side, I think the first thing is originally with Gregory, we were in Singapore. So we've experienced another ecosystem growing when we arrived there. And I think the first thing interesting about Africa is that when you're in a startup, the first question people ask you is like, are you solving a problem? And the good thing in Africa is there's so many problems to solve that you're in the right space. The second thing I think was really important is the rise of seed fund. And I think Launch Africa, AIC, some of our investors and others, because you need to activate the ecosystem. If those people are not here to give you the first check to move on, and we had other investors, so that was key to see the rise. And I think the most important is courageous entrepreneur, because when we started, to be honest, is at that time, a lot of people in 2018, you want to build a startup in Africa. Now everybody is really excited. But at that time, not that many people were excited globally when you go all around the world and go to New York and go to Paris and speak to people, they were like, I'm not really sure. So I think it's the mix of multiple factors that is bringing us today, and also that people that can compare to Southeast Asia and other ecosystems to see, oh, it happened there before. So the same is going to happen.
Yeah, not much to add, but to kind of jump on Mike's in terms of like Latin in comparison, in Japan, the startup fundraising was about 7 to 8 billion. So at this rate, Africa will surpass the third biggest economy in terms of like funding. We're quite excited about that. It's a huge wake-up call. Companies like Swivel and Zipline is actually entering the Japan market. So we believe that it's a key year last year, and I think this year as well. Global wake-up call, and within the African funding of about like 3 to 4 billion, I think 42% is still coming from U.S., 23% is coming from Europe, I think 20% about is coming from Africa, and then the rest of like 20% or so is like others, like Asia is 8%. So what I'm trying to say is that there's so much to unlock and capital opportunities from global investors. So I think there's much more opportunities that will come through.
Yeah. You can keep it. So I hear you. I think a couple of you mentioned the power of technology. We talked about the fact that there's a huge funding gap. There used to be between growth and early stage, of course, the boldness of entrepreneurs, and of course the breakdown of the investment amount. So let's maybe just narrow down a little bit and focus more on West Africa. Because of course, West Africa is really pulling ahead, driven by Nigeria. You made 8 deals in Nigeria, right? And actually, now we're seeing a couple of other West African countries trying to catch up. Senegal was ranked fifth last year, followed by Ghana and, to some extent, Ivory Coast. However, there are several facts that are proving that Nigeria is still like playing its own league. 80% of the YC Africa cohort is composed of Nigerian startups still. So how do you see things evolving in the next 10 years, or maybe shorter term, 5 years? How do you see them balancing out?
Okay, I'll take a stab first, but to keep it short, I think from a global VC perspective, this is really true that we haven't really been able to understand this market. This side of African continent, Senegal, I think we have been, it's been I wouldn't say easy, but it's easiest to enter, Nigerian market, Kenya, Egypt, South Africa. I think that's still where a lot of the global VCs are. But I think we have already kind of done that. Like, I don't think it's tapped out per se,
Yeah.
But we do understand that, you know, not understanding a market is no longer going to be acceptable. I mean, the reason why we are all here is to really learn and actually meet with the founders. So I do think in 10 years, you know, I think like Anglophone Africa, you know, similar language, like pegged to the euro, like similar like currency, less volatility. As a market, it's a huge opportunity.
Yeah.
So I think that is something that we really need to kind of embrace and to like execute.
So Ricky, you stole a bit of my pitch. So yeah, all those market, the CFA, one language, one legal system. That's what we've been pitching for the last 4 years to all the investors and saying, sure, you want to do fintech, you want to go to Nigeria with the inflation, with the FX problem, maybe you should look at Francophone. So that's part of what we believe. It's a strong factor for us as a super app because we know that the end game is going to be really into the fintech side, and especially now with our leasing business. So I believe that even today, many countries are suffering. So we talk about Francophone, but we don't talk about Francophone. We talk about Senegal, or we talk about Ivory Coast. We're a company from Togo. We operate in Benin. We operate in Gabon. We operate in Cameroon. We're not in Ivory Coast, and we're not in Senegal. And we're doing really great. And I'm just with VC, but the reality is that when we started, non-VC have funded our company. It was only private investors. So I think it's really important that we also help the ecosystem to activate the entire Francophone Africa. That's my view, because then we're going to unleash, and you have many amazing countries, and we're in Benin, but when you go to Mali and you go to Burkina Faso, it's 20 million people, you have a good GDP, and people are riding bikes, and people are lending money, and we need to unlock this, and I think that when you look at it, it's 250 million Francophone, and Nigeria is 200 million. GDP comparison is a bit low when you compound everything, but you'll see that in 10 years, it's going to be comparable. So Nigeria is great, and I'm thinking, go to Nigeria. And I'm not going to complain. They all go to Nigeria. They don't come to compete with us. So, but
Thank you. So us at Launch Africa, we're quite intentional about going into frontier markets. So far we've invested in 18 countries of the ones that are disclosed. And we're quite excited about the prospect of startups in these frontier markets. So quite intentionally, we've invested in places like Sudan, my home country, but also in Togo and Benin, like with Gozem here. And the amazing thing is that you will find entrepreneurs there who have product market fit. They may not know what a safe note is, but they have tons and tons of traction, right? They may require a little bit of coaching, but it's very worth it. I also believe that at the end of the day, capital goes where it multiplies, right? The customers in these markets, they have needs, and these needs can be fulfilled by technology. So eventually, once we have some successful examples, you know, like Gozem here leading the way, eventually the capital is going to be attracted to it. So I do believe in the Francophone countries that are outside of or in West Africa, outside of your, you know, Nigeria or Senegal, that eventually they will come. It shouldn't take that long once you start seeing more examples. I don't think Senegal was that relevant that long ago until you had examples like Wave, for example, and then now you will see a lot more investments in Senegal.
So one thing I've noticed, a lot of people who are, I guess, new investors to the African continent, their first point of entry always tends to be Nigeria. It's, you know, where the loudest noise is made. It seems to be where the most of the deals are, most of the money is flowing there, and it's exciting to get straight into the mix of things. So it's very easy to overlook a lot of the other markets and the other opportunities because there are problems that are being solved that are similar or maybe even the same in those same markets, and opportunities that are possibly from an investor perspective almost passing you by because we're following where all the money or the big noise is being made essentially. But one thing I think I find, at least from a West African perspective, is that it's always been more appealing to at least start in a smaller market. I mean, Nigeria is massive, and I get the appeal to want to go and start there because, you know, it screams, right? But it's also, I always feel like Nigeria isn't always condensed into one single market, but in reality, when you're there, it's probably 100 small microeconomies, right? So sometimes if you want to gain sort of that traction quicker, to get a product market fit that works, figure out where you're going from, either from an investor perspective, it makes a lot more sense to start in a smaller market, a Ghana or a Senegal, or somewhere where you can get to understand the market and the nuances in it a lot more intimately than you would in a place like Nigeria, particularly if it is a market that is new to you or a market that you're not overly familiar with, in essence. So I think we'll see a lot of that in the next 5 to 10 years as investors coming into the market become sort of more investor savvy around the continent and how things work. You'll start to see a lot more capital being deployed in the sort of surrounding markets around these big, whether it's South Africa or Kenya or even Egypt. You'll find a lot more going into the surrounding markets as well.
So what I hear here is Nigeria probably remain the entry country, the entry point for many foreign investors,
In the short term, yes.
Yeah, for the short term. And then but there's a huge untapped opportunity, and your bet is Francophone Africa because of the homogeneity, currency, same, let's say, language, etc., etc. So let's maybe just take a step back and look in the eyes of foreign investors a minute. There are now several big brands and reputable investors that are actually even from the US and European tier 1 VCs to big private equity and hedge funds coming into play and wanting a chunk of the pie as well. So it's really strengthening the competition, sometimes under unfair terms, to be honest. So how do we as local VCs, local players, differentiate ourselves? Because we cannot compete. We can compete, of course, with Sequoia or Tiger Global or Target Global. And it's an interesting panel here because we have really a diversity of backgrounds. So really keen to understand how you think about differentiation.
Yeah, that's a good question. I think every VC is grappling with and kind of thinking, how do we differentiate? How do we add value? I think and it's hard to generalize because different VCs have different strategies at different stages. But for the kind of generalized African venture fund, I think we need to understand and know the markets much better than the global investors ever will, and to ensure that we are the source of kind of truth and knowledge when it comes to understanding the local businesses, the challenges, the frictions, and the opportunities. So that way they're not coming in and replacing our capital, but that way we're leveraging like our knowledge, our insight, our proximity to the market with the capital that they're bringing in. And so that we're backing exceptional companies and founders and bringing in more capital than we might be able to bring in ourselves. There are a range of things. I could talk about all the wonderful things that Enza Capital does to add value to our portfolio companies. But you can come see me afterwards and I'll tell you later.
Thank you.
I think that a lot of the outside or sort of external Western money, et cetera, that's coming into the continent, not all of it necessarily takes on, a more competitive side in the sense that, we want to take a bigger chunk of this pie and outmaneuver sort of the local contenders and players in the market, right? So Commerz Ventures is an interesting case study for me as well, in the sense that they are a fintech specialist fund, right? And so their expertise are in fintech across globally, so across all markets, predominantly in Europe and the US, but they really understand fintech and they understand it well. When they came into the African market, I think the positioning was, we do not understand this specific market. And what we want to do is actually work with seasoned investors in this market so that we can work and collaborate together in making those investments. So I see it as a great collaborative opportunity in the sense that you're bringing in expertise and bringing in offers for some of the investing companies that you have that you wouldn't necessarily even have as a local investee, right? Being able to take a fintech perspective from a US company or European company that may be solving, or a Japanese company that may be solving something in a slightly different way, I think is a very relevant sort of nuance to add to what you're trying to do as a local investor as well. So enforcing, or rather trying to implement a lot more of those partnerships and collaborations for me is more the way that I would like to see things go.
Yeah, okay.
I think the smartest founders are the ones that try to keep their cap table quite diversified in terms of which investors come on. In terms of these tier one investors, you know, it's probably the best for them as well to have these kind of diversified cap tables, which also include local investors. Without mentioning any names, there was one fintech startup that had a round full of these tier one VCs. And after, you know, they invested a lot of money at a quite high valuation, they had realized that they didn't have the proper licenses to operate, and none of the local investors had invested because they already knew this, which was a tough lesson for them to learn. So I think eventually the best deals, we shouldn't have to compete as much with them as it will probably be in their favor to co-invest or get the support of local investors as well. But I'd love to hear from the founder's point of view.
Let's save his answer for the end. Maybe just.
Yeah, best for the last.
Yeah.
And not much to add, but like fact number one is that as a VC with LPs behind us, we have a mandate too to have to provide a certain level of exits and returns. So in terms of like the bigger guys coming, the bigger guys coming.
Can I help? Yeah, it's fine.
In terms of the bigger guys coming in as an exit, for us, sometimes the opportunity that we will be happy to take. So that's, just a matter of the fact. And I think fact number two is that the days where, I think this is the battery.
Oh, yeah. Thank you.
Yeah, I think the fact number two is that the days that VCs choose startups is over. I think the founders also have, the rights, especially at the later stage, to choose who they want to come in. Like Mo said, like who do you want as a partner? Like Tiger Global, for example, they're coming into Africa, but they're known to be hands-off, and that might be fine for some people.
Yeah.
So please do the due diligence for who you want to come in as well. And I think all the VCs in Africa are trying to, work together, have more communication, like who's good in specific regions. So yeah, like try to think of like the VCs as your partners, and then when bigger whale comes, then we'll try to advise the best we can as well.
Yeah, so collaboration. Yeah, of course. You mentioned earlier that you didn't get money from VCs, but it's still very interesting to understand how you...
So I completely support what he's saying and the fact that you should have a really diversified cap table. That's what we did since the beginning. It's true that with Gregory, we always have a lot of discussion with a lot of investors, strategic, VC. I think what is important for us is, are we getting along with them? Do we like them? And I think that's where it starts when you're a founder. After, okay, you're going to match the term sheet of this, but the most important is that when you're going to go and grow the company, do you want those people next to you? Do you have the same mindset? And I think that's the number one thing we're looking at. I think now on the big guys coming, I think some are excited about Africa because they see it's moving. And some other we're speaking to, some are really interested to learn. Because when we give detail of what we're doing, we just talk about our KYC process to a Silicon Valley-based VC, he doesn't know what we're talking about. That we need to go inside the house of the driver, we need to talk to the family, and they're like, really? Yeah. And just this small example is part of many examples when we talk to those big guys. So I think it's going to be a mix, but I obviously believe that African VC will have a massive competitive edge against the big check money. But yeah, and I mean, we're raising Series B soon, so I'll let you know next time.
Hey, we're very happy to hear that. So maybe let's turn it the other way around. I feel like most VCs are really chasing after the same deals. Basic fintech in Nigeria, mostly. So I don't know, it raises several questions, and one of them is probably the approach to diversification and de-risking the investments. What do you think about that? And maybe sector-wise, geography-wise, stage-wise?
I mean, from us, from the one talking to the VC, we always think like from the outside, it's a lot of club deals. And also it's thinking about, are you going to bet against with? So you're talking about potentially big VC coming from abroad. So especially if you're going to invest in the startups and you're going to go against a massive investment that happened recently. So do you want to do this? You know, and that's our perspective from the outside. But I'll let the insiders tell us.
I can speak a little bit on that. So I'll speak a little bit more from the frontier markets and from the markets other than Nigeria, for example. For a lot of startups, they actually don't have the luxury to branch out into many other different kind of fields, as they still need to build some of the infrastructural things in technology, such as fintech or logistics. One big example of that here in Senegal is PAPS. I mean, PAPS is literally trying to build infrastructure for making deliveries happen. So I think for a lot of the, especially of the smaller markets in Africa, the technologies and the startups are trying to build some of these infrastructural plays that are needed before you can get into more creative kind of verticals.
I'm probably not the best person to ask that question to, because that's exactly what I'm doing. But yeah, I mean, we are fintech focused, but it's definitely broader than just Nigeria. I think the opportunities, I mean, as I mentioned earlier, are incredible elsewhere across the continent as well. So one of the other ways, I guess, that some of that is de-risked in a sense, is that we do invest at a slightly later stage. So we tend to do mostly Series A, B, up to C. So some of the de-risking, in a sense, has been done for us. But it's an exciting space in that sense, right? You can't deny that there's a reason why a lot of the money is going there, but there are also a lot of problem statements to be solved for. And in no way has that space been exhausted. So yeah.
So, I mean, there are a range of questions, I think, that were contained in there. And I mean, when you look at market size, we're bringing it back to Francophone. Nigeria, 200 mil plus people, you know, the Francophone market, is that actually a market? Is it comparable? So I think there are questions around the ability to kind of scale across the different regions. Some of the benefits, currency, legal system, language, culture. Also, when it comes to fintech and valuations, there's a lot of capital in the market, and there are expectations on pricing that I and our firm, I think we believe are unsustainable. It's easier to raise $100 million on the continent than to sell a business for $100 million. And that should be a little bit of a concern. Because if we're raising at $500 million or $1 billion, where is that liquidity going to come from? And for us to build a functioning market, it's not about trading in and trading out. It's about building businesses that will last, that will return commercially, and that will solve these problems, I think, and build a future continent over decades that we're all kind of looking to build. So when we look at population as the metric of market size, it's also not necessarily right. So how many people are there in Nigeria? Everyone knows, like 204 million. How many households are there with over $10,000 annual income?
In Nigeria?
Sorry?
In Nigeria?
In Nigeria.
Compared to...
That's 2 million.
Yeah.
Right? So if we look at the addressable market, if you look at GDP per capita, so there are other things that we can look at to understand kind of market size. And then we talk about countries, but it's actually mostly kind of cities, like urban areas, hyper-concentrated urban areas that a lot of the technology businesses are solving problems for and investing in. So we can also start to shift our thinking from, is this kind of country, or is it actually more kind of city-based? And then if we want the big valuations, if we want to solve problems for the continent, then are we solving for kind of a certain class, or are we actually enabling the masses to either make more money, decrease their costs, or live a higher quality of life? And I think if we're able to do that, then yeah, the market's billions of people, and it's not just going to be Nigeria, or it's not just going to be Senegal. So I didn't answer any of the questions. I just decided to, you know,
you made
kind of riff on a few things.
It's great and valid point. You all made great points. So now let's just give the floor to the audience. I guess there are burning questions.
So good afternoon. Thank you very much for the panel discussions. Very insightful. I wanted to ask, with the African Free Trade Continental Area coming to effect, have some of your funding strategies changed, or how do you think that's going to affect how you invest on the continent?
Who wants to take that one? Launch Africa, maybe. You've been very active.
Yeah. So you're talking about the francophone trade, right? So I mean, I can use the example of GoZem since we have them right here, right? So GoZem was actually one of our earliest investments when we had first started. And at the time, you know, when we got the pitch deck, you know, it's a pitch deck coming out of Togo and Benin, which are, you know, like markets that are this big. But eventually, when we do look at the kind of agreements that are set between the surrounding companies, we decided to look at them less as, you know, Togo and Benin and more so as like francophone, right? So we ended up doing a lot more deals in the francophone region because of that. I was talking to someone earlier today, and they told me also that, you know, the customer profile in the francophone market is quite similar across the market, as opposed to trying to compare two customers from different anglophone countries, right? The cultural is a little bit more similar. And that's something that we've naturally taken into account as well, that we can trade some of the, we can treat some of the deals coming out of francophone as part of a larger market. And certainly in GoZem's case, it does appear to be the case, as they have expanded into other francophone countries quite successfully.
Yeah, thank you. Yeah.
Hello, everybody. I just have one question. It's actually two, but what are the economics of a VC fund? So when you raise $50 million, for example, when you exit, how much money did you make in general? And do you have an idea of what these economics are in Africa compared to other regions, in Francophone compared to Nigeria? Because we don't know anything about you guys. So.
Mike?
It's a good question. And so economics for VCs are set by the owners of the VC, the general partners, and that's then influenced by the limited partners, so the investors into our VC funds. The traditional economics for a fund, let's say a $100 million fund to simplify, is a 2%, so when people say 2 and 20, management fee, which is every year, there's 2% to pay for team, travel, due diligence, legal, admin, all of that. And then 20% is carry. And carry is the slice of the profit that a VC fund makes for its investors. And for example, if the VC fund starts at 100 million, invests, returns 500 million, all the DFIs right now are like, yeah, 500 million return on a fund. 20% of that 400 million difference would then go to the managers and then be spread across the team. In traditional VC, and then your question about the difference between the rest of the world and Africa, again, you can't really generalize, but venture funds typically look to target between 3 to 4 times return of the full fund after about 10 years. So that's the traditional structure, but I think a range of our structures kind of may differ. On the continent, management fees can be a little bit higher because the fund sizes are typically smaller, so maybe 2.5% or maybe even more. And then there's some LPs who provide money to subsidize additional work. There might be technical assistance or other work needed. I mean, I think the DFIs, we have some wonderful DFIs in the room, FMO and others who could probably provide a lot more insight really at a macro level around what's happening.
Yeah, I guess you were asking more around, the fund performance, so the multiple and the IRR. Okay, perfect.
So if you price the risk, the geographical risk, the political risk, the risk-weighted expectations, if you look at the cost of government debt, right? And if you're actually looking at risk from a traditional financial perspective, the returns that venture funds in Africa should be getting is like 40, 45+%. Most venture funds are probably not pitching or proposing that to investors and targeting somewhere between 15 to 25% IRR over the 10-year period.
Thank you.
Yes. Hello. So my question was, do you, as we're talking about the future of VC in West Africa, do you see a future where the exit will be on the BRVM, which is the local stock exchange, or do you see that it will stay around NASDAQ?
Je peux adresser et après ça, je vais partager
Do you want to take that one after?
So I had an idea earlier, and I would love someone to challenge. I'd love to get a debate as well. So I'm not really answering your question. However, I think the opportunity, or one opportunity, for Francophone Africa and for the startups that are being built here are to build lean, right? To not raise it crazy, insane valuations. And then rather than expecting to follow the route of a Silicon Valley company and to IPO on the NASDAQ, sell the business to one of the crazy funded Nigerian businesses that are actually trying to expand into a new market, right? So maybe the pathway to liquidity is different to the traditional pathway. So maybe it's building a business and selling for 20, 30, $50 million after raising $1, $2, $5 million, which is a fantastic result, right? That makes people millionaires, it creates a business, it could really be life-changing. So it's a challenge.
That's what we used to call gazelle or zebras, and there's been a lot of debate around that. A lot of people do not really think about that pathway for any of the startup, any of the region, because it's probably limiting the potential. That's been, a debate for these past years, but I'll let you add on that.
Yeah, so it's really early to tell. That's something definitely for the future of VC. But there is one example of something like that happening in a local stock market, and that's Fodi in Egypt. So Fodi is Egypt's first unicorn, and Fodi is public on the Egyptian Stock Exchange, and it's actually doing quite well. But Egypt is known to have a quite good stock exchange to begin with. So I'm not sure how applicable that is here, but we have seen an example before that has worked out successfully.
I mean, I'm not a VC, but anyone telling me that his plan is to sell the company midway to make some money, I wouldn't invest. But yeah, I think for us, we'll go all the way. I think everybody knows that about Gozem. There's no doubt about it. We want to grow the company, and I think our first objective is Francophone, clearly. And I think we're in one of the most exciting market. So yeah, and I think in terms of exit, to answer your question, is there's multiple way. And I think if you want to list or not, the question is like, are you strong enough into your market to go all the way? And that's with time, and as you expand, you'll know. But yeah, you can sell, but we'll see.
Yeah, real quick, I think, like Raphael said, it's case by case. If you want to go global, go IPO, NASDAQ, because you could raise more money, right? If your business is already, cash flow positive and you could maintain it, you don't really have to go IPO, right? So this is what's happening in Silicon Valley, where the average year of a company to go IPO now is 11 years. This means that us VC who have to, provide performance to our LPs in 10 years, when our companies are not going IPO, then we have to do the secondary market. There's more merger, acquisition. So I think that's kind of like my answer. But from just like my standpoint from Japan, a lot of the corporates are looking into Africa, not into startup VC, like investing, but more for acquisitions and M&A. And we're seeing more and more of this. So, we try to come in to to bridge in that gap. We come in earlier, but we try to kind of connect to, the potential exits or, the follow-on round and et cetera.
Round of applause for the panelists, our distinguished panelists. Thank you everyone for your attention.